Joining us now is Ben Maimon, Managing Director of investment management firm Clarity Capital. Mr. Maimon, thanks for joining us.
Thank you for having me.
So in terms of the banks, the tests, are the results positive or negative, and for whom?
Well, I would say that generally the results were positive, and I think that that's consistent with the market's view of the results, as well as the banks broadly in Europe rebounded after the results came out. The purpose, let's consider the purpose of the tests, was really to determine not only the health of the individual banks, but really of the broader system.
Right.
And so if we look at the results, we would say that no major bank was listed in the 25 that were found to be deficient, which I think is the most important outcome with respect to the soundness of the system. Then, aside from that, the tests were really done as of the end of December 2013. So the results, therefore, were a bit backwards looking and don't reflect some of the improvements that have happened since then. So while 25 banks were found deficient as of the end of December 2013,
right.
Since then, 19 billion euros of capital has been raised. It brought it down to, I think, 13 banks. And there's additional capital actions that will further reduce that deficit to 4 billion from 25 billion, which is really not so significant.
What exactly is the significance of this comprehensive review of the banks, and why was it done now? Why is it conducted now?
So this is the fourth review since 2009.
Right.
I think it was done at this point. There's a couple of reasons. One is I don't think that the integrity of the past tests were enough to provide confidence in the system, and in that they said banks failed, and then they continued to have to raise capital.
Right.
So, and the other thing is that in Europe there's a new banking authority, the European Banking Authority, that's taken over oversight of the banks, and that's happening this year. So what we're trying to do, I think, is establish that in fact the banking system is stable, so that it can regain the confidence of the public and investors in the system.
Okay. On the topic of confidence of the investors and the public in general, how has the public's faith in the banking system been hurt since the financial crisis? We've seen all kinds of headlines regarding litigation charges on one hand, fraudulent mortgages on the other hand. How has the public's faith really been hurt, and how can it be rectified?
Right. So I would say certainly, I think we all would know and agree that the public's faith in the banking system was shaken by the results of 2008, and the direct result of that was additional oversight and regulation that was intended to and will most likely reduce the risks to the banking system, and those include the two major ways that's done is one through the additional capital requirements, and also getting rid of some businesses that are perceived to be riskier. But now, and so that will restore, I think, the public interest. But we have to consider it as well from the investor perspective. And there, it's a little bit different take in that in the past, banks were valued based on their perceived profitability and stability. But I would make the case that largely over a cycle, the way that was interpreted in the market really ignored some of these types of tail risks or large risks that we experienced in 2008. So now we look forward and we say, okay, one bank now, as a result of having to maintain higher capital or being out of some of the more profitable, maybe possibly riskier businesses, now the profitability of the banks is likely to be lower than it was in the prior cycle.
Right.
And if the banks were appropriately I would say they were not appropriately valued in the past for those risks, but now certainly they're going to have a lower valuation. So we're at a point right now where we saw it today in the news also, where we have to try and evaluate and say, okay, for any given bank, when are their litigation? You brought up the issue of litigation costs. When are those litigation things going to be behind them? I suspect that's going to be soon. The bigger question relates to what's going to be the profitability of these banks going forward once they are up and running. The economy normalizes. That will take some time. And what will the profitability look like? And I would make one final point that's really what's important is that a lot of, historically, bank stocks have been dividend payers, and people are very focused that since these banks have been trying to rebuild their capital levels, the dividends have been reduced. Now, going forward, the question is, well, how much profits will they be able to generate? When will they stop having to build their capital? And really, what kind of dividend can they pay?
Right. Well, I guess time will tell.
Yeah.
Thank you very much, Ben Maimon, Managing Director of investment management firm Clarity Capital. Thanks for joining us.
Pleasure. Thank you.